Welcome to Trading Lounge and the Euro Indices. We'll be looking at the DAX, the Stock 50, the Germany mid-cap and the CAC and the AEX and the UK. So with this market here, we've been looking at wave 2 here and looking to count 5 waves up for wave 3 here and then looking for wave 4 to pull back. Now, there's some markets like the Stock 50 and the German mid-cap that have got sort of very clear sort of tops, but the DAX has sort of been lagging somewhat, and it doesn't really leave, from wave 2 here to wave 3 here, we're looking for 5 waves. So we're looking for 1 and 2, and then wave 3 here. And then we're looking for wave 4, which is a bit of a triangle pattern, and then up for wave 5. But it does appear with the sharp move down here, there's 2 things we have to consider. First of all, we need to consider this top here. If I can just clean this up a little bit here. With this wave 4 here being in here and wave 5 being up here as this triangle pattern and finishing here. But, it just doesn't sort of make sense to me, because normally wave 4 to wave 5 would be the same length as wave 1 here or thereabout. So I'm not quite sure what we've actually sort of got here, but we need to consider either wave 5 top being in place on this bar here, and we need to look at that because of the sharp move back down here after this triangle pattern, or we've got some really complicated sort of pattern here and we're still in wave 4 and we still need wave 5 to go up here. When I look at, I'll come back to this, but when I look at the Germany mid-cap here, it was a little bit the same here as well. It was better here because I could see quite clearly that we had from wave 2 here to wave 3 here, we had a better wave structure in here that was more sort of fitting. I was always unsure about this here because wave 1 was clear, wave 2 was clear, wave 3 here was a little bit short and a little bit messy, but it kind of fitted in there okay, and now this market has moved down below the top of wave 1. So really, even though that wave 3 was all a little bit short and messy here, I'm okay with putting wave 5 here of wave 5 of wave 3 here, and then we would look for wave 4 here to pull back to the wave 4 of 1 lesser degree, which would be roughly the 38.2% anyway here. But as I mentioned all the way through here into having a top in here, is that, well, look, let's just chill out a little bit. This is a medium level here in regards to the trading levels. Let's just allow this to become the retested resistance. So it basically popped its head through there and had a bit of a look, and it would need to basically lock under there. So I know that on an intraday level we've actually got here a little 1, 2, 3 here, or coming down to here, so a little 4, so there'll be another little low to come in here. But once that comes in here, then we'll see the market push back up, and then we can draw a line under that, and then we can short that there. So it's not quite there. We'll talk about that later, but I just really wanted to look at this. I mean, this from this wave 4 here, 1, 2, 3, 4, 5 here is just nice. It finished nicely. So with that in mind there, we can also have a look at the Stock 50 on the daily chart. And here, once again, too, we've got that nice pattern finishing for the wave 5 of 3 here. So in this case, we've got wave 1 and 2 here, and then 1 and 2 and 3 and 4, and then 1 and 2 and 3 and 4 and 5 here. Some of that was messy, but this is definitely the best fit with all of this. So we were looking for this to move down to the 38.2% here further down. So, and I'm quite happy with that as well. And we are seeing the CAC and the AEX doing the same thing as well. So if I can just move these across here for a little bit, and we'll look at the AEX to start with. So we know the AEX moving across here. You'll also notice too that I've got this wave 3 here, and not this one here. So I may need to switch this up a degree of structure, but it doesn't really matter for the time being which one this is here for us at the moment. But we can still expect lower ground here. I mean, what I sort of find interesting here is that, we've, based on the cash market at the top on the DAX, we have to use this one here. So yeah, anyway, I won't go into all of that, but still, this has got further to go down here now, and I can't recall what I said last time, but it doesn't matter because it would have been pretty much the same sort of story, and it would have been looking at the idea of the trading levels here. So we've got the major trading level here at 5, and 5 is the second strongest number in the market. Then we would have, if I can just remove that horizontal line and grab copy a darker one from here. So we've got group 1, minor group 1, which is 10, 20 and 30. And as always, you know, we would have been looking to being long if we got support up through here. We never got support up here. So what I do with the trading levels, and normally, so if I don't get support here, then I chill out because it can bounce off the pivot number 2 here and then move up from that point. But normally what I find is that with the number 2 here, is that if that becomes the retested resistance, that always helps me confirm that we're going to be moving down to this level here. So that's handy. And what we've got at the beginning here, we've got this first breakthrough here. So we never really chase the first breakthrough, as exciting as it is, but normally you will get chopped up in this because most of the time it will come back and retest. So in this case here, in terms of the retest here, we would look to go short under here. But I know that if you got the 61.8% from that low there to that high there, give it a chance. Once that goes under the level here of the 18 here, yeah, then you can say that's the high in there. So then you can grab that low, that high, find the 61.8%, gravitate over to the closest largest number over here and use that number as a tested resistance to get your first order into short. So we can put that up in here somewhere, okay? So let's just put it at the 17, just under the 16 there, right? And just to sort of refine it a little bit, you can refine it further. In terms of the count, it's quite clear we've got wave 1 and 2 here. And then 1 and 2 and 3 and 4 and 5 for the third wave. So this is a fourth wave. We could look for that to pull back 38.2% from that high to that low here, and then we'll have wave 5 in here. Once wave 5 comes in here, I'm treating it as wave 3 here. So what that means is that once that moves down here, which should be roughly the same length as wave 1 here, then we can also look, there'll be a bounce off. This is also group 1 down here as well. So you can put in 11, 12 and 13, and then 15 and 18 here. So we can expect a strong bounce off the number 3. That normally bounces back to the 4, but it can bounce back to the 5 as well. In this case here, we would be looking at, once that low's in place here, then you can grab that top, that low at number 5 here, and look for the 38.2% retracement level, which, as you know, would pull back to the wave 4 of 1 lesser degree. So it will be this little guy in here. So it's better to take some profit down here, or trading stop is always the best stop. So do what you need to do there, but I'll just remove that. So in a nutshell, we can expect the market in 3 waves to sort of move back up into here before moving down again into the 510 and below at that stage as well. So I think in a bit of a nutshell, we were looking for this to move back into this space. Just on the daily chart here, I was looking here, and this is why I've got it labeled like like this here, but with wave 1 here, wave 2 here, and 1 and 2, and looking at 1 and 2 and 3 and 4, an extension in the 5th wave here for wave 3. Not that matters too much. But at this stage here, I know that if we get support on top of the 30 here, the 530, we would naturally be long from that point. So now we just have to wait. We know there's a little gap here. We know this is the wave 4 of 1 lesser degree. We got some spikes here. So I've taken it off this low here because it sort of traded into that low there. But you can double check that on the cash market and the physical market, which would be better. And also the 38.2% retracement level is here, which is at the 500. So we can expect the market to come into the 500 here. Okay, don't worry about this wave 3 or this wave 3 coming back here just yet. I really need to sit with that for a while and just just look at other things. And of course, we've got Unilever for this as well. I can't find my chart for that at the moment, but we were calling in a top for that, weren't we? Because that was holding this market up, and over the last wee while, we've seen it move back down. So you've been watching that. So it will dance around that. Was it 50 or something? I can't remember. But anyway, yeah, it's on certainly on its way from that. So you can use that. The CAC is the same as well. So the CAC here had that early top in, so we've sort of labelled that, and it's been reluctant. It's been reluctant to move down as such, but now it's also working through Group 1 as well here. So 1, 2, and 3 and hundreds in this case here. So just keep working this lower as well, but expect it to come down to the 5,000 to cover this gap here as well. And we better get back to the DAX here as well here. So, you know, this is a bit of a little puzzle for me, this one here. I can't figure it out, but I know that from this strong move down through here, then we need to heed that warning. Quite, you know, there may be another count for this. I don't not quite sure the best way to look at this, but with this sharper move back down here, it certainly put it into a problem situation. I'll just double check this here from this low here. And this is another way to look at it, really. So this is the 50-60% retracement level here. So just to be mindful of where that is from that low there. And the reason for that is that, you know, this could be probably a long shot, but up for 1 here, and then back for 2 here, and then moving up from that point there. Just clean that up there. So let's just go in and have a look at this. See, just on the hourly chart here, you know, we've looked at this here. We know that on the physical market, this was the high here and not this one. But on the futures market, this is the high here. It did leave us with this ABC pattern here. And originally, I had this wave 4 here. And it's probably possible in a way that, you know, this is a new high here now, isn't it? So we could have it as the triangle pattern as we have it. But it would just also be as logical as well to have this as wave 1 and 2 here and 3 here, then an A and a B and a C for wave 4 here, and then up for wave 5 here. So there's a couple of ways to look at this, and it's always been messy, and you know that I haven't been able to really been a great help here. So yeah, but you know, if this is a top now, we should start running quite smoothly now. So we know that some of the other markets have been weaker for a while. So in this case here, it's the same as the other markets now in a way too, but we've got wave 1 and 2 here, and then 1, 2, 3, 4, 5 for the third here. The fourth wave here is pulling back to the 38.2% retracement level. So from this little high wave 2 in here to here, we're right on the top of wave 4 here. So we should see a move down through here. So yeah, you can look at that. This wave 4 might get a bit more complicated here as well, but it has reached its height here, so that's something. So, but we could still expect this to move down. So wave 5 can move down below wave 3 here, and also having roughly the same length as wave 1 here. This trend line through here is significant where it's bounced off from here. But once you've got that in play here, then we'll still look for a retracement level here. So if I just draw this out a little bit here, if we look at coming down to this sort of space, you can adjust this, of course, you know, I mean, you'll need to do that. And the 50-60% retracement level will be in here, so we can look at that's where it can come back to. So there's a bit of navigating through all of this as well. And I've just got this as an A and a B and a C here, but that may not be the case as well. It may be another degree higher, but it doesn't really matter. The main point here is that once you get a new low here, it may only come back up to the wave 4 of 1 less degree here as well. So just keep an eye on. But basically, you want to see the market come back up above the level here of 12,650. And as I always say, that of course the 500 is the most important, then the 800 here, the 700 and the 600, they're useful, But what I find is it's the 650, the 50 here, the 65 number that really becomes the balance line in all of this. And as this market does its thing around here, you will see that the 650 will become the balance line in here, and you'll use this number more than any other number. You will use the 600 here. Once it becomes resistance to add to things, you will know that if the market comes down to 500, it can come back and bounce to the 600 again. So, it's a useful number, but the 650 here will be the one that plays out where you'll, get your orders in, so to speak, here. But yes, look, one more wave down, and bear in mind that wave 4 might get complicated as well. So this leg up here may just be the first leg. So it might come back to this area here, come back up and test it again here, and then move down in 5 waves. It should be roughly the same as wave 1 here, and then look for the corrective move here. And as the market, dances around this number later in the game here, you'll see that it will become the resistance, and we can move down from that point. As I just mentioned before on the big chart, this was roughly the move down through here. Realistically, it could be counted as an A and a B and a C wave here. I don't think that's the case, because this C wave here looks more like a wave 3. It's very powerful. In a corrective move, the A wave is the sharpest one, and then the B wave, and then the C wave is on normally more of a bit of an angle like that. If it's like that, then it's like the third wave down. So it is like that. So we're likely to get the third wave there. So, but the structure is at this stage 5, 3, and 5, so it can be corrective. It's only if we can note that as being corrective here, or we get the 5th wave. Also, too, if we get the 5th wave, whoops-a-daisy, the real trade will be on this side here, because we get 5 here, that means after a correction, we'll get the other 5 here. That's what you're looking for, okay? So, planning would be the order of the day here for that. And if I can bring the FTSE along over here, then the FTSE is doing much the same thing as well. On this market here, I noted that we actually had 3 waves down here, and on the cash market we had 5 waves coming down through here. The market pulled back up probably above at 61.8% here, but 61 inches sort of a bit higher here, but that's sort of okay too. Technically, it's just it's just sort of where the goalposts are really, but it's anywhere from basically 40% to 80% is the norm, but the bell curve comes in around the 61.8% of that sort of thing. So here we've got the same sort of count as the other European markets, so we should be heading lower as well. This impulse wave coming down here is not finished. We can count that as 1 and 2 here, then 1 and 2 in here, and then 3 in here. So looking for the 4th wave here. You'd think that it would bring it in line with and put this 4th wave in here and this 3rd wave in here, but I just see that this is unfinished here, so I think this is a different count, and we need to look at it differently as well. But holding short down into the 73 here at least would be the target area for this market, and the 3 here is the top of group 1. So from 7,000 we've got 100, 200, and 300. This looks like there's a 61.8% here, or some sort of area here as well, but that number 3 there is where you're going to see the bigger bounce, so that's what you would trade to. All right, thanks for tuning in, and enjoy the weekend. Cheers.